Well, did you know that over 2/3 of Americans aren't able to go to their own bank and get a personal loan due to their low credit score? As banks have closed off traditional pathways to access credit, many Americans are forced to use other options, including predatory payday loans. So how is financial technology working to transform this industry and serve this underserved group? CEO of Elevate, Ken Reese, is joining me to explain. Good morning, Ken.
Good morning.
Well, in the past, banks and financial institutions were the main source of loans for middle-class Americans. So what has changed?
Well, the U.S. has changed. When I was growing up, we had a strong and stable middle class defined by savings and very stable incomes. Well, as everybody knows now, that's changed. Now almost half Americans have less than $400 in savings. And even worse, 2/3 of the U.S., 160 million Americans, has a credit score less than 700. So they're no longer being well served by banks, and instead they're being pushed into dead-end products like payday loans, title loans, pawn, and storefront installment loans.
Wow, those are some staggering numbers right there. Well, how or what can technology do?
Well, in some ways you have to look to the unique challenges facing so many Americans. You've got people that don't have great credit scores and their car breaks down or their child gets sick, they need to go into the doctor, and all of a sudden it's a really big problem because they would be forced into the arms of payday lenders and title lenders. And what technology can do is provide really a new generation of more responsible products with lower rates and also help customers build back up their credit so they have more financial options over time. And really, that's sort of what we're all about as a company, Elevate Credit.
Well, let's talk about financial technology startups. How are they changing things to help customers and then give them better options than predatory loan products?
Well, I can talk a little bit about what Elevate's done. To start, we've now been in business a number of years. We invest $40 to $50 million a year in technology and advanced analytics, and it's allowed us to drive down the rate. So we've now served 2 million consumers with $5.5 billion worth of credit and saved them $3 billion over what they would have spent on products like payday loans. And in some ways, we're just getting started because we think the real exciting opportunity is when fintech innovators such as Elevate can start partnering with banks and helping banks re-serve their customers again and help them say yes to the average American again.
Mm-hmm. Well, what other actions are there to combat the problem of predatory lending?
Well, of course, regulation can help, and we support the regulations that are being promulgated by agencies such as the Consumer Financial Protection Bureau, but ultimately we believe innovation is the answer, not regulation. And just like in so many industries, technology is disrupting old industries and providing better solutions. So we'd like to see regulators and legislators really support the kind of innovation that's going on, support banks partnering with fintech, and support banks get back into serving their customers with better products and ultimately help eliminate these predatory products that are out there on the market today.
Fantastic. Well, before we go, where can our viewers learn more about this new approach by the fintech industry?
Our website, elevate.com, is a great place to start. Talks about our products as well as it provides research information on what we call the new middle class, these 160 million Americans with limited credit options that need better, more responsible credit.
All right. Well, thanks for your time this morning, Ken. We appreciate it.
Thank you for having me.
Mike, over to you.